Hello, I'm Liam Tarry, editorial at the Treasury Today Group. It goes without saying that Know Your Customer, or KYC, has been the bane of corporate treasurers' lives for many years. With more than 1.3 million bilateral correspondent banking relationships across the industry, and countless more for corporates, how is SWIFT meeting the challenges and needs in this complex arena? I started off by asking Sebastian Niemeyer, Senior Market Manager, Corporates and Supply Chain at SWIFT, just how KYC for corporates has come about.
The community, the financial community, is these days broader than just, in brackets, the banks. We were also asked in 2017 to look also closer into the matter if KYC is also a challenge for corporates and the business relationship between the financial institution, our owner, and their corporate clients. And you can guess it was not a surprise that the answer was a strong yes. KYC is also a challenge for corporates, and we started to work on this challenge as well. So in fact, we do reuse the existing KYC platform, which has evolved over time to become a more modular approach, more flexible repository, and to see in how far we can frame a standard around this repository for global KYC requirements, which is fitting the needs in the corporate to bank space.
I then spoke to Jimmy Zhang, Corporate Banking Manager at Pepper Financial Services, to explain the problems that SWIFT's KYC for corporates will finally solve.
Well, I think we need a standard for KYC because we've been constantly sending documents to our counterparties, and it's the same set of documents to multiple counterparties. And I think having a standard, like a standard product, and also I think also if the banks accept the standard practice, the standard product, it will make the whole KYC process way more streamlined. For example, right now I'm actually onboarding BNP, and what I found is they have their own requirements, which is different to the other banks. So whilst say 60%, 70% of the documents are the same across the banks, each banks have their 30% differences. And the difference could come down to the wording that they need on the certification in relation to the organization chart. So I think having like a SWIFT for corporate system where, as long as all the banks accept that standard, it will save a lot of time from a corporate point of view in trying to provide that information to the banks.
Daniel Oxner, Head of Central Settlement at Worth Finance International, agrees.
I think one of the main milestones is that this initiative from SWIFT, I think, is the right way, because we were looking at different solutions before, and the market there is very fragmented. Several providers in the market, some have already left the market meanwhile, and I think SWIFT is the only provider which will be able to really define a standard and make sure that they have the critical mass where the corporates and the banks will be using this solution.
I then spoke to Rebecca de Kuiper, Transformation Management, Corporate Coverage EMEA at BNP Paribas, about the cost of SWIFT's KYC for corporates.
So BNP Paribas believes that the contribution should be for free, while the business model should allow to cover the cost through consumption fees and, if required, annual fees for banks deductible from a consumption cap once this would be achieved. But definitely we would strive for having the contribution for free for our corporate clients who are contributing to it. It's only this way we think that we will achieve a maximum adoption in the minimum time frame possible. So I think this is the way we should go, and what the additional services are concerned, everything which is related to public information, of course, should be and remain for free, but pre-population of data, structured data, that the client is not willing to upload because for certain good reasons, but because they don't have the time, the FTEs, etc., we can understand that these would be paid, and this is under discussion with SWIFT, but I think today it's too early to pronounce ourselves on that.
SWIFT's Sebastian Niemeyer is confident that it will become industry standard.
Once the banks and the corporates are sitting around the table are really discussing on the field level if this specific kind of information is really relevant and really needed according to the law, then you will come to results which are somewhat of surprising, because even banks being located in one jurisdiction, might it be the US for instance, they're talking to each other and they are immediately spotting that, maybe this is not really a legal requirement, but this has been some kind of an internal requirement, which is fair enough. But at least they're able to talk to each other and to fine-tune what is really necessary and to come up with a more efficient way to do KYC.
Thank you to Sebastian Niemeyer, Jimmy Zhang, Daniel Oxner and Rebecca de Kuiper for a fascinating discussion on what will prove to be a landmark in our industry. You can read the full article just by following the link in the description below.